Okay, so we're Pantheon Ventures. For those that don't know, good place to start would just be a bit of background as to the, when, how, and why it was formed, and what its, what its focus is.
Yeah, sure. Happy to do that, Philip. So Pantheon Ventures is a global leading private equity infrastructure and real assets business. We've been around for about 40 years. So we've and sourcing and executing private market investment opportunities on behalf of our clients. We've got about 88 billion of assets under management and advice, and about just over 400 staff across, I think, 10 offices. And of those 400 odd staff, about 130 are investment professionals, so solely dedicated to executing on those private assets.
Okay, and one of your major focuses is digital infrastructure, and now that's a sort of catch-all that can cover a sort of multitude of sins. So, is it as broad as that, or are there particular market segments? I mean, obviously, my focus is data centers, which I think is one of the things you do, but there's vast amounts of others. So, yeah, some flavour as to what bits of digital infrastructure you do or don't focus on.
Yeah, absolutely. I mean, we've been a relatively early investor, I'd say, in digital infrastructure more broadly. I think we saw this as a key sector that we needed to be focusing on. And it's interesting, we started off investing in infrastructure. It was toll roads, it was airports, it was utility assets. And very soon sort of there was a separate telecoms team and a lot of the investment banks, but it really sort of hit mainstream infrastructure investing probably sometime in the mid-teens, and we were investing in a number of early telecom tower deals, certainly well before the pandemic. It remains really a key focus for us. We've made a number of recent investments, as of like Delta Fibre in the Netherlands, NBI in Ireland, CyrusOne, Vertical Bridge, what else? We've got Vantage as well. And we've made all of those investments on behalf of sort of clients of Pantheon, but particularly we've put those in our listed infrastructure vehicle, PINT.
And in terms of some of the, I mean, you obviously watch what's going on and pretty shrewd at seeing where the markets go, but I mean, some of the drivers that I guess mobile data's usage is already huge, but depending on who you talk to, we're still almost at the infancy of what's potentially happening, and 5G is it's promised and it's beginning to happen. I do some work in the semiconductor space, and they're already talking about 6G, and I presume someone's working on 7G. So just thoughts as to how big the opportunity is around mobile data, how you see that market developing maybe.
No, look, it's a really exciting market. I mean, it's hard to think, when Steve Jobs came out on stage with his iPhone, and just, what a massive change that's made for all of us. Look, I think there are just huge tailwinds for mobile data usage. We've just seen exponential growth year on year. I think the pace of, that growth has really come from mobile data usage. So that would be whether cloud services, video gaming, all these things are driving consumption of data on the move. So we are seeing just a lot of need for investment. We've got some of the mobile network operators are somewhat constrained in terms of just the massive capex requirements to build out, whether it's mobile towers, whether it's backhaul fiber, or indeed data centers. So that's somewhere where we think private infrastructure capital can really make a key difference. And you'll have seen some of the big trades that happened last year, and we've been involved in a number of those as well. So 5G rollout accelerating massively. I think a stat I seem to recall was about a 40% growth from Q1 21 to Q1 22. I haven't seen updated stats from there, but I'm sure that growth trend will continue going into the future.
Okay, and I think you referenced cloud there. Again, no secret, it's been around quite a while. But I mean, there's massive excitement around it, and it's grown massively. But then I know again from data center, there's been a slight pushback. Some people realizing that it perhaps wasn't delivering all its cables, at least in the enterprise market, and people have slightly retrenched, and we've got this hybrid model. So again, just thoughts as to sort of how mature cloud is is there going to be a sort of second coming? Just, yeah, where are we going to go with it?
Yeah, look, I mean, there's again big drivers of growth. So IT outsourcing in particular, we've seen it is an increasingly attractive option to navigate kind of the current cost environment, digital data security, looking sort of at some of the increasingly complex systems. I think that's one of the key drivers. Once companies are kind of continue to make that shift towards cloud, it really is about cost reduction, risk mitigation. I think improving scalability as well. Additional sort of 5G, as we talked about, IoT edge computing is also, I think, going to drive kind of that increase in data generation. So I think all of those are key drivers for growth. We're working on a growth figure probably around about 20%, I think, expected growth for 2023. And I think as applications increasingly move to the cloud, we'll just see entire systems migrating to the cloud, and it's actually going to be very difficult to pull that back and sort of reverse. So I think it's kind of a one-way flow. We've invested across predominantly hyperscale opportunities in the data center space, with key clients like AWS or Azure or Microsoft, Google Cloud. I think kind of those continued investments to back up, to provide redundancy, the massive content being created by Meta or Twitter or TikTok is just really, really great tailwinds in that space, and we don't see that in a lot of other infrastructure sectors. And then clearly, any of the other big tech companies that want to are accessing heavy workloads, need that low latency, that is going to drive increasingly the need for mobile data, for cloud services, and for data center investment.
Yeah, and in terms of, I mean, we talked about mobile, but fiber, as I understand it, there's a somewhat of a shortage. I know it's a very expensive investment, but there's some suggestion that we almost do need if not a renewal, a massive expansion of that, for reasons you already alluded to, just the sheer explosion in data and applications and etc. So just your thoughts as to how pressing that need is, and again, the size of that opportunity maybe.
Yeah, look, I mean, fiber is a key area of focus. I mean, we feel like it's an essential right, like water and electricity. So people talk about it as the next utility. I think fiber cabling, in terms of relatively low risk from a technology perspective. So it's key thing here to understand is we want to be investing in the infrastructure, not the tech side of things. Growth in fiber can be very different depending on which geography. So the Nordics, where I'm from, have had extremely high penetration of FTTH. You've got some markets which have had a proliferation of altnets. The UK, scores pretty highly up there, but still with very relatively low penetration levels. And I think we've seen slower, some of the areas where there's been slower growth. So pretty much on the continent, so Germany and Italy in particular. We've seen some slower growth, so we'd expect future growth in those markets to be quite interesting. I think as we look at the greenfield rollout and the capital requirements, I think to come to your point, availability of contractors, skilled contractors, the technical and engineering expertise will obviously be critical, and forms a key part of our due diligence and of our underwriting, and looking sort of at what the impact could be. We've seen some inflationary impacts across all goods and services, but I think particularly in this space, just given the massive growth. Actual availability of fiber has certainly caught some headlines in the press. I think what you need to do is scratch a little bit beneath the surface. And when you're dealing with large, well-capitalized companies with strong supply chain relationships, and making sure that they've got that supply chain in place. I think they're obviously well placed. I think some of the less well capitalized altnets probably will find life possibly a little bit more difficult, not least because they don't necessarily have that strength of supply chain, but also sort of access to the capital markets, access to growth capital, and possibly less able to wear some of those price and cost pressures. And that also comes, I think, down to those inflationary pressures on both labor and cost of goods, the capex spend. I think a lot of that will come down to the strength of the franchises being able to build out these fiber networks.
And I think you mentioned a couple of names familiar to me from data centers in Cirrus One and Vantage.
Mm-hmm.
So clearly you might not want to share that why, but I'm just interested why you maybe chose those particular data center organizations to invest in, and theoretically, do you have plans to invest in others, or how do you see the data center space in terms of the overall digital infrastructure market?
Yeah, look, data centers for us, it's I think we sort of see, maybe if I put the three key sectors onto a grid, towers typically is seen as the lower risk. We've got long-term contracts, inflation or index-linked cash flows with strong counterparties with these long-term contracts. So we see that as kind of the lower end of the risk spectrum. We like to have the growth element attached to that. So then you look at kind of your data centers and your fiber, that you're starting to go higher up the risk curve. So what we're trying to do is look for opportunities to go alongside hyperscalers in particular. As I mentioned earlier, we want to be investing with groups that it's not just about kind of a cost of capital shootout. It's also about the service levels they can provide to their customers. I think that's important, being able to help secure these data centers, the land permissions, the growth, the fiber connections. Just the expertise of doing that means we're tending to go towards these sort of larger hyperscale segment.
And in terms of sort of future opportunities or developing opportunities, I'm just wondering, low orbit Earth satellites, for example, there's a bit of noise around that. I'm not sure how much deployment's been going on so far. You mentioned the edge, and again, defining the edge is 10 different people have 10 different definitions, but it's been talked about as a potentially nice opportunity. And then even things like the metaverse. So clearly you perhaps aren't going to invest directly in the metaverse, but the infrastructure again that supports that. Just your thoughts as to what other emerging opportunities there might be.
Okay, there are a few things buried there. Let me see. So satellite, look, technology, I think is yet to be fully proven as a viable alternative, whether it's connection quality or whether it's cost compared to kind of upgrading the existing network. So, I think it's extremely interesting, but certainly not infrastructure as we know it. I think, extremely high barriers to entry as well makes that quite difficult. And kind of looking at the deployment as well, and some of the geopolitical considerations of satellites, I think would be sort of an area where we want to understand and see sort of that market develop further. Edge and metaverse, look, again, extremely exciting. I can see kind of a lot of investment going there, and a lot of people looking to find opportunities with these new areas of expansion. Excellent for us because it's leading to massively increased use of data, and so that drives revenues and capacity requirements for our fiber, our towers, and our data centers. But I just don't quite yet feel these have kind of been fully proven out or commercially viable, for us to be considered as infrastructure. You have to remember that what we're trying to do is find opportunities to invest where there's kind of these long-term contracted cash flows with investment grade counterparties, and the business revenues are just not fully proven out yet.
And I guess we probably can't have a conversation about digital infrastructure without mentioning sustainability. So I'm just interested in how important that is to, when you're looking at investment opportunities. Clearly there's a financial angle, but do you also look at the credentials, the sustainability credentials of potential companies to potentially invest in, or how? And I know again it's a slightly difficult market to pin down, in that people can look as if they're being very sustainable, but when you scratch underneath the surface, it's perhaps not. So just your thoughts as to what sustainability, how important it is, and whether it's easy to identify what companies are actually up to.
Yeah, no, look, great question. And ESG, so wider than just sustainability, but ESG is absolutely central to what we do at Pantheon. We've been a long-term believer in making sure that we look at not just the E, but also the S and the G, and that goes and is fully sort of embedded in our investment process. It's not sort of just a pure risk function. It is something that's important to us. It is something that's important to our investors, and I think it's something that we should all be focused on. Maybe to give you a few examples of kind of what we're doing. So we will look at, if I try and make this relevant for the digital infrastructure space, looking at very simple things like replacing diesel backup generation on a tower with solar and batteries. This is relatively low hanging fruit for us to be able to do. Looking at data centers where these are net zero, looking at using big data analytics, for instance, to sub-meter different parts of a data center, so that we're not cooling a whole data center massively, overcooling a data center when actually some of the servers are quieter than others. So there's a number of things you can do, and I think partnering with some of the best-in-class companies and sponsors makes this, we're very focused on this, they're very focused on this, and I also think it's a business differentiator in terms of winning new business.
And just I'm intrigued in terms of your investment sort of strategy. Do you have a fairly rigid formula that you put numbers in and other things, and you get an answer, or is it much more instinct? Clearly, there's some sort of statistics you'll want to look at, but then you take a view, as you say, onto how the market might be going, the people running that business and stuff. I'm just interested as to how you put together a sort of decision around an investment.
I think if it was as simple as putting numbers into a box and cranking the handle, we might all be out of jobs. But no, the analytical side is extremely important. But there needs to be sort of a wider decision making across that. So as I look at it, there's a massive investment opportunity in front of us, just given some of the people, some of the groups, some of the sponsors that we partner with. We've got extensive relationships and can be highly selective in terms of who we're working with, what type of assets. We can look for relative value at any point in time. So if I feel, or if the investment committee feels that the data center space, for example, is extremely expensive as a general theme, then we can, should we say, focus on other subsectors in the digital space, or indeed other sectors. So we're not forced to just invest in digital. So I think having that flexibility has been really important to us, as we've seen in some of the high valuation environments we've seen recently. But look, what we're looking for can be summed up relatively simply. We're looking for long-term contracted cash flows. We're trying to do that with high investment grade counterparties. So that's why the hyperscalers are really important to us. We're looking for kind of long-term contracted revenues or availability-based revenues. We prefer that over volume dependent. So if you compare an airport, for instance, that is GDP sensitive and clearly pandemic sensitive as well. Whereas the data centers, the digital infrastructure space more generally, has been much more insulated and also has that underlying tailwind and growth of data usage. We're looking to both for yield off the existing assets, but also for opportunities to expand the growth of these assets. So that would, be contracted extensions of tower portfolios with some of our existing clients, or indeed data centers, or having opportunities where we're partnering with a fiber rollout strategy where either it's a coax replacement in the US, which has been highly positive for us in the US market, in sort of first tier, second tier cities, or in Europe more generally. I think kind of some of the new build fiber opportunities have been pretty interesting, but again tending to partner with larger, better capitalized businesses than, should say, some of the smaller altnets, which we talked about earlier. And then finally looking limited exposure to some of the market risks. So we want to make sure we've got that inflation linkage on the cash flows. We want to make sure that we've hedged any FX volatility. That could be in the investment itself, or it could be in the geography of those cash flows. So we're very much a developed markets, OECD focused investor. We want to make sure that we've got power price pass through on our contracts so that we're not exposed to some of those commodity risks. And then interest rate is another key one for us, obviously, with the current raising rate environment, wanting to make sure that we've got debt structures and hedging in place so that we're not exposed to some of those the current interest rate hikes.
Maybe just in finishing, I mean, we're at the start of a new year, so when it comes to that, do you already have a pretty well developed strategy for what you want to achieve during the next 12 months in terms of which opportunities you see, or do you have a sort of more loose plan, and then as opportunities arrive you sort of slot those in where applicable? Just again intrigued as to how you would go about developing your portfolio over 12 months. Is it highly planned and everything precision, this happens, what's going to happen, or is it a bit more some of that and then you suddenly bump into something, think, hey, this is a good fit? Just how it works.
I thought you were going to ask me about my New Year's resolutions.
No, I suspect like me, you've probably abandoned them already, but no. Yeah,
they were firmly out the window. Look, we've got a great sourcing ability. We've got a lot of very strong partners. So, I think what we're trying to do is just expand and build on what we've got already. So, building a well-diversified collection of assets, strong downside protection, supporting the digitization of European and US economies. We need to stay disciplined in our underwriting. It's very easy for people to get ahead of themselves and factor in more growth, more upside. We're really focused on downside protections and attractive entry valuations. That's done us well over the last 40 odd years at Pantheon, and we would hope that discipline leads us well into the future.
Okay, it's been great to talk to you, so thank you for your time, Richard. Appreciate it. Thanks again.
Thanks, Philip. Bye-bye.